Real estate, it's full of promises, isn't it? Short-term rentals promise high cash flow, quitting your 9 to 5, and making tons of money every single month. Long-term rentals, on the other hand, promise wealth building, stability, and a carefree path to retirement. But here's the truth, it's never that simple. In this video, we're gonna cut through all that. I'm not here to sell you on one or the other, or to tell you why Airbnb is the only way to go and it's the best thing ever and you have to try it. This isn't about flashy pitches or get rich quick schemes. It's about giving you the real picture, breaking down short-term and long-term rentals so you can decide which one works best for you. Now, if you've been following me, you already know I'm a big fan of Airbnb. It's a fantastic option, especially when a real estate deal doesn't make sense otherwise. Maybe you're a first-time buyer trying to make things work financially, or an investor looking to squeeze a little bit more out of a property. But today isn't just about Airbnb, it's about the bigger picture, the pros, the cons, and the realities of both short-term and long-term rentals. Because here's what I've noticed, too many people fall for the big promises. They hear things like, short-term rentals are your ticket to financial freedom, or buy a bunch of properties and you'll retire rich. And while there's some truth in both, the reality is success in real estate comes down to one thing, and that's consistency. Whichever strategy you choose, if you stick with it and put in the work, that's the one that's going to pay off. So whether you're drawn to the high energy world of short-term rentals or the slower, steadier pace of long-term investments, there's a lot to consider. So let's talk about short-term rentals like Airbnb versus long-term rentals and why you might lean toward one over the other. What's up, everyone? My name is fNK&x. I'm a real estate broker right here in Toronto. If you get any value at all from this type of content and you haven't already, please hit that like button and subscribe to the channel. If you are thinking of investing here in the city or in the GTA and want to book an appointment with me to have a chat about how I can help you with the entire process from start to finish, whether you're looking to do short-term or long-term rentals, I have all my contact information in the description below, and I'd be more than happy to help. Okay, so first things first, let's talk about the difference between a short-term rental and a long-term rental. It's pretty straightforward. A short-term rental, like Airbnb, is a property rented out for shorter stays, typically ranging from 1 night to 28 days. These are the vacation rentals, the weekend getaways, or even the temporary housing options people use during relocations. Short-term rentals are fully furnished, and as the host, you're responsible for everything: utilities, internet, cleaning, and even stocking things like coffee, toiletries, and linens. It's essentially running a mini hospitality business like a hotel. A long-term rental, on the other hand, is much more traditional. You rent out your property to one tenant, maybe a single person, a couple, or a family, on a lease that usually lasts 12 months or longer. These properties are typically unfurnished and the tenant covers their own utilities. As the landlord, you're not as involved day to day, which makes things a lot more low maintenance with long-term rentals. Also with long-term rental, you're typically looking at a tenant who's signing a 12-month lease, and if things go well, like they're paying on time and they're happy with the property, they might stay even longer. I've seen tenants stick around for 2, 3, even 4 years. Long-term rentals tend to be more of a set it and forget it type approach to real estate. Once you've got someone in the property, you're not constantly managing turnover. Short-term rentals are a completely different game. On average, you're hosting probably 5 to 6 different sets of guests every single month. Over the course of a year, that could be around 50 groups just for one property. And keep in mind, we're talking about one group per booking. If, for example, each group has 4 guests, you're looking at about 200 people coming through your property in a single year. That's a lot of wear and tear, a lot of communication, and a lot of management. Compare that to a long-term rental where it's just one family, one couple, or one tenant, maybe with a roommate living there for the entire year. The amount of people you're dealing with is drastically lower, and that's one of the reasons long-term rentals feel more stable and less intense for many investors. So when you start thinking about the short-term rental side, you might be wondering, why would anyone want to host 200 people at their property every year? And honestly, the answer is pretty simple: higher cash flow. That's really the main reason most people choose short-term rentals over long-term rentals. There are some other common reasons as well, but it seems to always come down to the cash flow. With short-term rentals, you can usually expect to make 2 to 3 times the cash flow compared to a long-term rental. Cash flow, of course, being the profit you're left with each month after all your expenses are covered. So let's say you've got a 1-bedroom condo in downtown Toronto. As a long-term rental, you might charge $2,500 a month, but as a short-term rental, that same condo could bring in $5,000 or $6,000 or even $7,000 a month. Obviously, with short-term rental, it's not a guarantee, of course, and there are different variables like your exact location and the quality of your unit and furnishings and things like that, but that's the kind of range I see pretty consistently. Also, that's gross revenue we're talking about, what you bring in before expenses. And yes, there are quite a few more costs associated with a short-term rental, but even after you factor in all the costs, you're usually left with a much juicier profit from a short-term rental than a long-term one. And not just that, but especially here in Toronto, if you buy a property right now and go the long-term rental route, unless you're putting down like 40 or 50%, let's say you go the traditional 20% down payment, 80% mortgage route, your cash flow isn't just going to be lower, but it will most likely be negative. It is almost impossible right now to find cash flow positive properties in Toronto, especially in the condo space, unless you're targeting like duplexes or multifamily homes, which often come with a much higher price tag. So if you are an investor and thinking about doing a long-term rental, just something to be aware of. 9 times out of 10 right now, you'll be short probably $500 to $1,000 a month after rent that'll need to come out of your pocket to cover your expenses. So things like your mortgage and taxes and things like that. And that's not to say that makes those properties bad investments. I actually have a video talking about other ways to build wealth through real estate beyond cash flow, and you can check it out right here. But the point is, you just need to be ready for it because it's money that you will need to account for on a monthly basis. So at this point, you might be thinking, well, if it's possible to make 2 or 3 times as much and you can avoid the negative cash flow situation altogether, why would anyone bother with a long-term rental? And that's what we need to talk about next, because there are quite a few reasons. And the first most obvious one is the level of management they require is on another level. Think about it. With 200 guests coming through your property every year, you're not just managing real estate at this point, you're managing people. You'll get plenty of guests, and honestly, from my experience, a majority of them will be easy ones where you don't have to do much at all, but you will have the occasional high maintenance guests who will find something to complain about, no matter how perfect your place is. Then there's obviously dealing with the chance of hosting parties or dealing with issues like noise complaints or even property damage. And yes, there's lots of things you can do to minimize the chances of these things happening, but at the end of the day, it could happen. Running a short-term rental isn't just about owning the property. It's about being in the hospitality business. You're providing an experience, and that requires a certain level of care and attention. If you're not someone who enjoys dealing with people or doesn't want to be hands-on, this can be a little bit more of a challenge. That's really the thing about Airbnb and short-term rentals. It's not a set it and forget it kind of business. Sure, we can talk about property managers later, and they can help lighten the load. But at the end of the day, if you own the property, then running a short-term rental is part real estate and part hospitality. Honestly, it's almost like running a mini hotel. Now, with long-term rentals, it's a completely different story. Long-term rentals are much more straightforward, just real estate, no hospitality. You've got a tenant in there, and yes, the property should still be in good condition when the tenant moves in. Things may still come up, like if there's a repair that needs to be addressed, but for the most part, you are not really communicating with the tenant. Ideally, you'd just be dealing with them maybe once a year when it's time to renew the lease. That's it. It should be very low maintenance. Of course, nightmare tenants also exist. There's always a chance of that, but generally speaking, long-term rentals are more of a set it and forget it type of strategy. And that's really the trade-off. You'll absolutely make more money with Airbnb. There's no doubt about it. There's a lot more income potential there. But the flip side is that you're paying for it with your time. And listen, I don't care how many people on YouTube or Instagram try to sell you on the dream of Airbnb being a completely passive investment where you can quit your 9 to 5, automate everything, and sit on a beach making $10,000 a month. It's just not true. I've personally said this in my past videos or to people who have talked to me about it directly. A lot of times people will get to the cash flow part of these videos and then just instantly book a call with me. And yes, you can automate a lot of the process. Honestly, probably up to 80% or 90% of it if you're doing everything right, but it's never going to be completely hands-off. At the end of the day, you will eventually run into some issues, even if it's something minor like running out of toilet paper during a guest stay or having something malfunction with like the TV or a light fixture. And you will occasionally have to talk to guests for things like late check-ins or checkouts, or even things as simple as restaurant recommendations. And for some, that may not even sound that bad, and some people might even actually enjoy it. But the point is, it's something you need to be aware of, because even at its most streamlined, it will never be 100% passive. Now, obviously, hiring a management company is something you can do, and they will take some of your profits, and that's something completely different. So I'm not talking about that right now when I'm comparing the short-term to long-term rental. Also, one last point I do want to make about this that is often overlooked. When you're dealing with a long-term rental, yes, it definitely is way more passive than a short-term. I don't think anyone would argue that, but there is still a level of management to it, especially when you haven't found the tenant yet, especially here in Toronto or Ontario as a whole, and we'll talk about this a little later, but the landlord and tenant board here in this province does not favor the landlord. So when you as a landlord are trying to find a tenant, you need to make sure you do everything you can to pick the perfect tenant, because once they sign that lease agreement, you're stuck with them. So that means going through all their documents, credit reports, background checks, employment letters. Make sure that this tenant is someone who will obviously not give you issues in the future. And if you've personally had a bad experience with a tenant in the past as a landlord, this part of the process can be very exhausting. And I'll usually see this from the side as the real estate agent. It's not as simple as just listing the property for lease and then just picking the first person that comes along. Yes, you can get lucky and have an amazing candidate apply right off the bat, but this process usually takes a month or two, especially if you're being extremely selective. And I've had my fair share of experience with both long-term and short-term rentals, and I can honestly say I've dealt with some long-term rental scenarios that ended up being a little bit more work than a short-term rental. So it's just something to keep in mind, especially if you're someone who's thinking about going the long-term rental route with their investment. It's not always going to be as passive as some people make it out to be. That being said, if you are thinking about investing in a property and renting it out the traditional long-term way and are looking for a little bit of guidance, I can definitely help you with the entire process, from finding the perfect property to running the numbers and then to helping you find the perfect tenant. Or if you are looking to go the other way with a short-term rental or Airbnb, I do have a video on that entire process and you can check it out right here. So at the end of the day, you have to ask yourself, do I want to deal with more guest phone calls, demanding guests, and the occasional bad review? Because that's part of the package with short-term rentals. For most people who get into the short-term rental game, they decide it's worth it for the extra cash flow. I personally feel the same way. It's worth it to me. But here's the thing. A lot of people who leave the short-term rental space and start saying things like, my Airbnb is dying, or it's oversaturated, or it's way too much work. Those people often weren't cut out to be short-term rental hosts in the first place. There are a lot of reasons for this. Maybe they weren't prepared for the management side, or maybe they just weren't good operators. Sometimes they were the kind of landlords who already ran their long-term rentals cheaply, cutting corners, not really fixing things that needed to be fixed, and then tried to apply the same approach to short-term rentals, which doesn't really work. What happens is they invest poorly, they don't set up their properties to compete in the market, and then they blame the system when they don't get the results that they expected. That's when you hear people say things like the market is oversaturated or Airbnb isn't profitable anymore. I'm in a bunch of short-term rental online groups on like Facebook and Instagram, and I see it all the time. But at the end of the day, it's not the short-term rentals that aren't viable, It's that these people either fell for the marketing hype or weren't ready for the reality of what it takes to succeed in this space. And that takes us to the second biggest reason one might choose to do a short-term rental over a long-term one, and that is the Landlord and Tenant Board, or LTB. I've already talked about it briefly, but if you've been a landlord in this city, you know that the LTB is one of the most tenant-friendly systems in North America. On the one hand, it's great that tenants are protected, but on the other hand, if you end up with a problem tenant, someone who stops paying rent or damages your property, evicting them can be a nightmare. The process can drag on for months and sometimes even years, and during that time, you're losing income while still covering all of your expenses. This is one of the main reasons some landlords switch to short-term rentals. With Airbnb, you're not tied to a tenant for a year. If a guest causes problems, depending on the severity of the problem, you can just wait until they're gone in a few days or call the police if you need them out. It's that simple. They're not protected by the Landlord and Tenant Board rules. I've seen landlords switch to short-term rentals just to avoid dealing with the LTB. They'd rather manage the extra turnover and maintenance than deal with a bad tenant who knows how to work the system. It's a real consideration, especially if you've had bad experiences with long-term tenants in the past. And again, I don't want to speak badly of tenants. I think it's the 1% that kind of ruins it for everyone. A majority of the properties I've helped my clients with are actually long-term rentals, and as long as you carefully select your tenant, you generally will not have an issue. But there is always that chance you end up with a bad apple, and if that happens, the current process to evict is a nightmare. And that takes us to the next key difference you have to consider when differentiating between the short-term and long-term rentals, and that is the city regulations. This is where things can get a little risky. Just because short-term rentals are legal in your area when you buy a property doesn't mean they'll stay that way forever. Cities change their laws all the time. They could ban short-term rentals, limit the number of nights you're allowed to host, or impose stricter rules that make it harder to operate. That kind of volatility is just something you have to accept if you're getting into the short-term rental space. We've already seen it here in Toronto. Pre-COVID, you could do whatever you wanted with Airbnb. There were essentially no rules. Fast forward to today, and you do have quite a bit of laws and regulations. In fact, the city of Toronto has a full page on their website dedicated completely to the laws and bylaws associated with short-term rentals here in the city. I'll leave a link to that site in the description below if you're curious. But to kind of give you the short version, the property has to be your primary residence, and you're limited to 180 nights per year for short-term rentals. Those are really the biggest points. With long-term rentals, on the other hand, you don't really have to worry about a city suddenly outlawing them. That's not a thing. If you buy a property as a long-term rental, you can be pretty confident that you'll always be able to rent it out. You're not constantly wondering if the rules are going to change overnight. In fact, the city of Toronto is pushing you to rent them out with the release of the vacant home tax a few years ago that states homes that are not occupied by either a primary resident or a tenant will now incur a 2% tax. So to make your investment worthwhile, it's almost a must now to rent them out long term. And that takes me to the next difference between the two forms of rentals here, and that is scalability. I touched briefly on it a few minutes ago, but the city of Toronto now requires a property to be your primary residence for you to use it as an Airbnb or short-term rental. That means if you're dreaming of building a portfolio of Airbnbs in the city, unfortunately, that ship has sailed and you're out of luck. You're capped at one property. For investors who want to scale, this is obviously a pretty serious limitation. You need to look outside Toronto. Most municipalities at this point do have the primary residence rule in place, unless you start to go to areas like cottage country, like Muskoka or Blue Mountain, where the regulations are a little bit more lenient. You still need a short-term rental license, but are not limited to that one property. But even then, managing multiple short-term rentals remotely in those areas then obviously comes with its own challenges. When you talk about scalability, long-term rentals definitely have the edge here. Building a portfolio of long-term rentals is relatively straightforward. You buy one property, rent it out, and then move on to the next. Over time, you have 2, 3, 4 of these, and you're building a steady stream of passive income. Maybe not in the beginning, but you're building wealth. And because long-term rentals require less hands-on management, it's easier to scale. At that point, you can even hire a property manager to take care of the day-to-day operations, which frees up your time to focus on acquiring more properties. But let's not sugarcoat it. Long-term rentals, like we already said, aren't completely passive, and the more units you have, the more likely it is that you'll start having issues. One of the biggest issues that's often overlooked is tenants not reporting maintenance issues right away, which often lead to small problems turning into big ones if they're left unaddressed. For example, if there's a leaky pipe somewhere in the unit and the tenant doesn't notice, or it doesn't really affect them, like maybe it just reduces the water pressure, which they don't mind. Then later down the line, that leak becomes bigger, and then maybe you have a unit flooding issue. That becomes a far more expensive problem. As a landlord in a long-term rental, you might not even see your property for a year or sometimes even longer. While you can include a clause in the lease allowing for periodic visits, it's not common for landlords to inspect the property while it's still occupied by the tenant. In most cases, you'll see it after the tenant moves out or as they're preparing to leave. And by that point, it's often very difficult to hold the tenant accountable for any damage that you discover. Maintenance is an area where short-term rentals can actually shine because you're in the property more often between cleanings, turnovers, and guest visits. You're catching issues early. A guest will let you know immediately if something's wrong because it impacts their stay. This allows you to fix problems before they become expensive repairs. Of course, the trade-off is that short-term rentals experience more wear and tear simply because of the high turnover. Furniture, appliances, and even walls take a beating when you've got dozens of people cycling through every single year. So which strategy is right for you? It really depends on your goals, your resources, and really your personality. If you're someone who enjoys hosting, has an eye for design, and doesn't mind being hands-on, short-term rentals can be incredibly rewarding. They're also a great option if you want the flexibility to use the property yourself from time to time. But you have to be realistic about the time commitment and the challenges of navigating Toronto's regulations. If you're looking for stability, scalability, and a more hands-off investment, long-term rentals might be the way to go. Just be prepared for the occasional headache with the landlord and tenant board, and remember that the cash flow isn't as high and most likely going to be negative at the start. Long-term rentals are about the long game, building equity and generating steady income over time. At the end of the day, there's no right or wrong answer. Both strategies have their pros and cons, and the best choice for you depends on what you're looking to achieve. My advice, start small. Try one property, see how it feels, and learn as you go. The experience will teach you more than any video ever could. Anyways, that's it for today's video. I hope this gave you a clear picture of the differences between short-term and long-term rentals. If you've got questions or thoughts, drop a comment below, or you can reach out to me using any of my contact information below, and I'd love to hear from you. And if you found this helpful, please don't forget to like, subscribe, and hit that notification bell so you don't miss any of my future videos. Thanks for watching, and I'll see you guys on the next one.